Two of the world's biggest economies, Japan and the United Kingdom, have fallen into recession.
The yen tumbled to a 24-year low against the dollar this week, a level not seen since 1998.
Japan lost its crown as the world's third largest economy to Germany and is now officially in recession. Its shrinking workforce and the oldest population on the planet are crippling its economy. Its GDP fell to $4.2 trillion USD, approximately 591 trillion yen, in 2023, trailing behind Germany, China, and the United States. And get this, their economy shrank by a whopping 4% in the fourth quarter of 2023, marking the second consecutive contraction. That's got some economists really worried. This isn't some sudden slump. The economy here has been sluggish for decades. Is Japan's economy tanking? And what does this mean for the global economy? Let's discover. Remember when Japan's rapid development was the talk of the town? From rising from the ashes of World War II to becoming the second largest economy in the 1970s and 1980s, Japan's journey was nothing short of miraculous. Japan embarked on a classic export-based model, paving the way for the economic success story that much of East Asia has followed. Countries like South Korea, Taiwan, and Singapore have mirrored Japan's path to prosperity, rapidly ascending the income ladder. During its heyday, Japan amassed significant wealth, with its leading companies acquiring prime real estate in the United States, including iconic landmarks like the Rockefeller Center and the Empire State Building during the 1980s. Japan's rise to economic prominence instilled a sense of awe and, in some cases, trepidation among Americans who felt they were playing catch-up to Japan's innovative and competitive economy. However, the economic euphoria proved short-lived. As the 1980s drew to a close and rolled into the next decade, Japan's economic bubble burst, sending shockwaves through its GDP. This bubble had been building up over decades, fueled by easy money from the Bank of Japan, soaring stock prices, and skyrocketing land values. But by the late 1980s, it all came crashing down. In the 1990s, Japan found itself grappling with the aftermath of its financial crisis, particularly the bad loan crisis that plagued its banking sector. As a result, the Japanese economy struggled to regain its footing, averaging only 1.1% annual growth from 1991 to 2003, quite a drop from the heady 3% growth of the 1980s. Even today, Japan continues to grapple with the lingering effects of its economic struggles from the 1990s. It's been a roller coaster ride with ups and downs, but it's also become a sort of blueprint for development in the region, albeit with some cautionary tales. So, what's been happening over the past 30 years since its initial downturn? Well, experts point fingers at various factors, with one big culprit being the weakening of Japan's currency, the yen. In an effort to boost exports and combat deflation, Tokyo deliberately devalued the yen. In fact, in 2023, the dollar-yen rate hit a staggering 140.5 Japanese yen against the US dollar, a historic low. This weak yen has had significant implications, making Japan less competitive on the global stage and even allowing Germany to overtake its ranking. This devaluation strategy was led by late Prime Minister Shinzo Abe, who introduced the bold set of economic policies back in 2012, famously known as Abenomics. One of the key aspects of this initiative was the easing of currency rates to tackle deflation head-on. While Tokyo's efforts to artificially inflate the economy were commendable, some critics argue that it failed to address the root cause of the problem. Japan wanted inflation for years, but now that it's here, it's causing headaches for consumers, especially with rising prices of domestic goods like fuel and electronics.
I'd like to give more and more back to my employees. However, in reality, while the costs of goods and expenses are rising, it's impossible.
But wait, there's more. Japan also faces the challenge of falling birth rates and a rapidly aging population. Can you believe it? Recent figures reveal that 36 million people in Japan are now 65 or older, with about 1 in 10 individuals aged 80 or above as of September 2023. But still, young generation doesn't want kids. Now, why is this such a big deal? Well, let me tell you. An aging and shrinking population can actually be pretty deflationary. Think about it. Folks in their 70s and 80s don't exactly splash the cash like the way people in their 20s, 30s, and 40s do. This demographic shift presents a significant hurdle to future growth and raises concerns about the long-term sustainability of Japan's social and economic systems. Moreover, Japan carries the burden of a hefty public debt, ranking among the highest amongst developed nations. This high debt level limits the government's ability to implement economic stimulus measures, further hindering efforts to jumpstart growth. Moreover, strict restrictions on foreign labor have exacerbated labor shortages, further fueling inflation. Combine these factors with a weakening yen and you have a recipe for a higher cost of living. So, what does this mean for the global economy? While Japan's economic slowdown is concerning, its immediate impact on the global economy is likely to be limited. As the fourth largest economy, Japan remains a significant economic player and a major trading partner for many countries. However, its long-term trajectory, if left unaddressed, could have broader implications. A stagnant or declining Japanese economy could potentially dampen global trade and economic activity, particularly in the Asian region. In this context, Japan's situation could serve as a valuable case study for understanding and addressing similar issues elsewhere. Furthermore, Japan's low interest rates and overall economic environment could influence global investment patterns. Additionally, if the decline of Japan, a long-standing symbol of economic strength, persists, it could potentially erode investor confidence more broadly, having a psychological impact on the global financial landscape. So, what's the way forward for Japan's recovery? One potential solution to Japan's labor shortage is immigration, but the country's been hesitant to accept foreign workers on a permanent basis, instead favoring temporary stays. This approach has sparked criticism for discrimination and a lack of diversity. Another option is robotics, which is slowly being integrated into various industries. However, their use has not yet reached a level where they can completely compensate for the shortage of workers. What Japan really needs for recovery, what they've needed for the past 2 decades, is significant structural reform. These reforms include loosening labor market regulations, fostering innovation and productivity, and creating an environment conducive to starting growth and expansion into mid-size and large companies. Additionally, empowering women in the workforce is crucial. Renowned economist Simon Kuznets once quipped about the 4 types of economies in the world, categorizing them as undeveloped, advanced, Argentina, and Japan. Argentina, despite having all the potential for success, somehow hasn't quite made it to the top. On the flip side, Japan, despite facing numerous challenges and setbacks, has managed to defy the odds and thrive. So, despite facing economic recession, do you think Japan remains one of the most prosperous countries in the world, with a strong influence on geopolitics and culture? Well, after the pandemic, many major economies like Germany, Japan, and Britain plummeted into recession. What does this really mean for the world economy? Are we hurtling toward a catastrophic global shutdown? Share your thoughts in the comments below, and if you want to know how Britain destroyed itself, don't miss the eye-opening video on our channel. Subscribe now and prepare to be shocked, enraged, and maybe a little wiser. Thanks for watching.